Stock market analysis. We're going to look at the stock market and the market condition monitor. We're going to look at the S&P 500 today. Now, I want to remind you that RV hosts Future Speak every Wednesday. He does over 20 different futures contracts in the indexes, metals, currencies, foods, energies, and crypto. And that's every Wednesday for levels 2, 3, and 4. So if you want to see all of that analysis, and you want to see these other indexes that I'm not going to cover today, then he can show that to you. And that will be a great example of all of the analysis that we do in all of these futures contracts. And the analysis, I think, has been absolutely spectacular, led by our momentum indicators and cycle analysis that put those together, and they're extremely valuable. All right, so let's switch over now and look at the S&P 500. We're going to go back and forth between the charts on different time frames and our market condition monitor, because I want to look at it a little differently today. I want to really associate the tools that we use and the charts that we use together, and how that fits on particular different trading styles. So even for investors, and that's the first one we're going to look at now. So here's your S&P 500, and the charts that I'm going to look at that are in here that I think are just a great way to see how these work together. I'm just getting my pointers up over here. And this is the weekly, this is the daily, and this is the 2-hour. And I'm going to show you all the way down to 3-minute charts as I pull up our day trader platform for you to see. So let's just start out here looking at the this chart here on the weekly. So when we do our cycle analysis, of course, we look at the repeating rhythms in the market. And if you look at this, you can see that they're really exist. On the bottom, there are actually 2 overlapping ones right over there. One of them is RSP equal weight. The blue one is the S&P 500. You can see how they came down together in this troughing period right over here. And they came down together here, and came down together here, and came down together here. And yes, there's another one of those periods where they're likely to come down together right over here. So the first thing that we want to look at is the value of the reversal scout. Now the reversal scout right over here turned upward. This is our momentum indicator that I love to use on the weekly chart that really does a great job of helping us define the rhythms in the market, the heartbeat of the market, or these cycles that you see in here. There's a minor cycle right there, and that you can see defined here, a second minor cycle, and when they both came down together, that was this big break in the stock market. And then they moved up again. This upward move was a little bit earlier than I expected, so I thought it would test this low. Of course it didn't, and when we got this upward turn, it was pretty clear that what I expected was not happening. Here's your minor trough. This is amazing. This is a swamped condition. Swamped meaning that there are forces bigger than this that were preventing a decline to come that was lasting. So in other words, the correction could have come here from the middle of the minor cycle, but it rallied all the way towards the end and past the end of that ideal minor cycle and gave us that trough. And that was just unbelievably bullish when you see that kind of condition. And then it's continued to move up. Now it moved up here. We had another fib extension below it, which it moved through, and it moved up here. And right now these fib extensions are pointing to a potential resistance right where it got up to here around 65.90s right there, or up over here around 68.25. I keep saying I can't believe it's going to make those higher levels, yet it keeps doing it. So if you were an investor, you want to be looking at these longer term conditions. When you look at the stock market and you see this, you say, well, it's not giving me any reason to sell other than the fact that it's prudent to lighten up when things get to extreme levels in the stock market. So an extreme level is looking at the fact that it's trading at 217% of GDP. That's an extreme level. it makes sense to be lightening up on your long positions. It doesn't mean to, go short. There's nothing that says here to go short. An important thing that I like to look at is the distance from the 34-week moving average. So I'm going to go into studies right over here, and I'm going to edit studies, and I'm going to add in a simple moving average right over here, and then I'm going to change this to 34 weeks. Those of you that are on Thinkorswim, you'll know how to do this right there, and I'm going to say, I'm going to make this a little wider line, and I'll say okay, and I'm going to apply that. So now what's important for you to see is that during these cycles right over here, during the rally phases, it gets far away from the 34-week moving average, and then during the declining phases, it tries to get through them or approaches them in some significant way. Most of the time it will continue to move down through that moving average, and you can see going way back over here the very common bullish times where it tries to get down to it but can't, and when it turns bearish it breaks down through it, as you can see. And look at how far we are from that 34-week moving average right there. So right over here is a 23% retracement level, 61.83 right now. That's would only be like 7 or 8% pullback in here, which isn't very much. But you can see that each of these cycles it does approach that level over there. So that's really something that we should have in mind. So if you were an investor that was lightening up over here, you might be thinking about, well, if it pulls back in here, I'm going to be a buyer again, or those people that don't have positions on that they would like to have on the long side. Well, there would be your opportunity. Let's pull up our market condition monitor and look at it for the longer term holders. So I have this set to intermediate. So this is all of the styles right over here for the trader type right there. And you can look at time frames or trader right over there. We're going to look at these 4 indexes right here. And you could see that if you were an investor, you could see that this is keeping you very bullish. Here the SPY in August 11th went from bullish to very bullish, and you can see these dates where it went from bullish to very bullish, and it's just telling you if you're an investor, or a longer term position trader, well, the market has kept you on the long side. Looking at that, and I think it's really important for you. If you're not a askSlim level 3 or 4 member, then you wouldn't have access to this. But I think it's really important to be able to look at that. If you're, we're going to look at it all the way down to short-term intraday traders, and that would be only for level 4 members. So let's go back here to the charts now and say, well, if I was a shorter-term trader, then I would be looking more at the daily charts. And you can see in here the alignment. Now, I was confused on these cycles for a while because the Russell is out of phase with the S&P 500, as you see here. But last week we said everything is still bullish, as I showed you every one of those indicators. The option bias indicator, all the way since back over here in April, has said keep your positions on the long side. Your slim ribbon PO, again, these are both level 4 indicators, kept telling you green positive and giving you momentum resumptions with those green arrows. It's never been red. You got to go, well, way back in here to get conditions where this was red right over there. So the market has kept you on the long side, both on the weekly and on the daily. Now, we pointed to the resistances up here, and this is 65.88. The next one up here around 66.61 on the short term. And the market just doesn't want to go down right now. Even today, here on Friday, the September 12th, while we have pretty significant negative breadth in the Dow and the Russell moving to the downside, the NASDAQ is still finding bids led by Tesla, which I said earlier in the show is the #1 shorted stock in the Mag 7, and that stock is leading on the upside today, along with a few of the semiconductors. So we're still getting the NASDAQ moving to the upside, but these targets right over here, right here in the low 65.90s, here up around 66, 67, right up over there, something like that, is where this fib extension zone, it's a target and resistance zone right over there, and it's gotten up there. Everything in here is still bullish. You can see this is where the period in here, where the S&P 500 and the Russell both have corrective phases right into here. So this right over here is late September through early October, where this could pull back. If it holds above that key level right over there at the 63.60.58, then that will tell me that things are still okay. And maybe if it gets only into this rising support right now, which is just below 6,500 to down to around 6,450, if it comes down into there and then moves up again, well, we'll know that things are still good, as this upside movement is dominated by this upside movement on the weekly chart. So you could see how you use these together, weekly momentum pushing up so hard, it's keeping the daily momentum in there pushing up also. So right now, everything in here is still bullish. It would take a significant amount of selling to change that. And again, late September to early October, we would expect one of these corrective periods. These cycles have been very bullishly shaped, and maybe this one will turn out to be the same, and maybe it won't. So we'll just have to wait to see. In the meantime, it's really super positive. Let's look over here as we look at the short term, and you can see also very bullish, very bullish, very bullish, very bullish. I mean, this has really kept you looking at things that are very bullish. You want to know the stocks that are very bullish on the short term? Well, you can see that right in here by scrolling right there, and it gives you a good sense for all of the stocks that are very bullish. You want to see the ones that are very bearish, and you can see that right over there. Caesars, earlier in the show I mentioned MicroStrategy. I think that is the canary in the coal mine. I'll say it again for Bitcoin, which I think is going to end up going much lower. And these are the positive the negative looking stocks in there. And you can see PayPal, Union Pacific, Chipotle just as terrible, Starbucks. These are stocks that have been bearish in there. So that is a look at the short term and how this could help you. As you can see that these are all very bullish, and you're going to have to get some deterioration to get some sense that this is changing. So here is your look right over there at the short-term chart on the daily chart, still positive, as we can see. The expectation that it would hit this area and potentially up here at 66.64. Remember that the area way up here on the weekly up there is at around over 6,800. So if it gets through this level, that would be the next place. That's why we have two projection lines that are in there right there, and two projection lines that are here on the short term right there. All of this still pointing to the upside. So if you were a short-term trader, very short-term, we'll call it near-term or a day trader, you'd be looking at different things. And I'm going to switch over here to the 2-hour chart. So what I have in here is a 2-hour chart, but I have overlaid the daily cycles in there so that you can see. Here we have the market condition monitor, the market condition indicator, which you can see has been very, very bullish for a long period of time. Here it was bearish, and then once it crosses through that swing zone, here it gives you the bull signal. Here it tests and gives you more bull signal. This has given you great bullish signals. And here, every time there's a correction, I'm going back to right over here, it then gives you a sense when it's going to be positive again on this slim ribbon PO, again, a level 4 indicator. And when these turn up right over here and you get these indicators, that really gives you a good sense for the intraday. So if you were an intraday trader, you were some kind of a trader that, traded intraday swings, or even a scalper, this could give you a good indication of your directional decisions. Because when they're shaped this way, positive reversal scalp, positive slim ribbon, firing here telling you momentum moving back to the upside, your bias has to be to the long side. I mean, you wouldn't be taking short side trades. So this gives you a great sense for how you would as a scalper even, or as a short-term trader, the kind of things that you might use. However, there's more. If you were a short-term trader, if you were a day trader, I want to say, and that is how do you really get a good sense for what's going on intraday? Well, I'm going to switch over now to our day trader right here, and this is what we broadcast all day long. This is now live. This is our day trader cockpit. There are 2 different cockpits that are in here. So you can see, I'm just going to go through this quickly. The impulse monitor right over here is a general sense for directional conditions for what's going on right now for the day. In other words, when it's green, it's telling you positive conditions. The turbo on just went off. You could see that was on there, and that was telling you there was buying coming in, but now that seems to be slowing down. And you could see IWM and DIA, these are negative. So if you're a pair trader, you'll be able to pick out which ones you want to be long, which ones you want to be short. This is my 8-minute strategy. We've got stuff built in here in our new trader radar in there. And this timing line that's in there is very important because you could see it was driving to the upside here in the SPY and QQQ, while the IWM and the diamonds were going to the downside. Well, it couldn't be any clearer than that. Here you could see the negative conditions on the trader radar. Here you could see the positive conditions on the trader radar. And when it goes yellow, well, that gives you a sense for things are stalling. And certainly they were stalling at that point. Now it's going gray. Here is the trader cockpit. And what we're looking at right now is the fact that, well, the S&P 500, and you could see here on this reversal scout right there, that's kind of the longer swing. That tells you, well, the things are, not necessarily very strong. Here's your swing trader line, and that's now turning down. Here you could see the NASDAQ has been strong and it's gotten into the yellow zone. Generally, when it gets into the yellow zone, it will move through between 70 and 100% of that. Now, this is starting to struggle a little bit, but normally you can count on that. And then you get the key support and resistance levels. And here you could see the Russell has started to come down with support here. If it gets through that level, then it will likely accelerate down through there into this next support. Also, you could see the trader radar that's in there, and it really helps you get a sense. Look at the NASDAQ where it was telling you that it was positive versus looking here at the Russell, which was showing you negative. This is pink. It will turn dark red when it really starts to move down with intensity. But right now it's kind of a light red or pink telling you negative conditions. Let's head over to Cockpit 2, because if you're a scalper in the futures, this is the one you really want to look at. And this is just absolutely fantastic. So you can see in here, the top here is 15-minute, 8-minute, and 3-minute in the ES. This is 15-minute, 8-minute, and 3-minute in the NQ. And you can see that these things just were screaming at you that they had positive conditions right over here. That's the 3-minute, and this is the 8-minute where it was pushing up and telling you in the ES. These were periods you wanted to be scalping or trading on the long side right there. And then it started to stall on the 3-minute right over here. So you don't really have a trade here. This is neutral. This is now telling you a little bit negative right over here. Here it was screaming at you in the NASDAQ. And these were big trades in here because it turned bullish on the 8-minute, giving you some sense around the where you want your directional decision to be up until where it started to lighten up and turn yellow. You can see in here it really accelerated up where it moved up from 2440 right over there all the way up here through that was 24,040 all the way up here through 24,107. So it was like 65, 67 points on the upside right over there for the scalpers. And that was just a beautiful thing here. You could see that the 15-minute was green over here also. So I like to use it entry, exit, position direction, and position size. Where your size would be bigger when this matches up, because when all three of these are positively green, it then tells you that the probability is higher that the impulse will be strong in that particular direction, which was the upside, of course. And when they're all dark red, the probability will be high at moving to the downside. So you can see the incredible value in here for scalpers when you look at that. So that's Cockpit 2. This is Cockpit number 1. And wow, do you have fantastic information for the purposes of day trading. So let's go back to that intraday chart right over here, and you can see in here I showed you only out to, the 15-minute, but this is the 2-hour, which kind of dominates it all. And it was really giving you a good sense for if you were an intraday trader. Well, this is really for the near-term conditions right over here. If it was like, let's just say 1 to 3 days, looking at that and then potentially putting that together with what you have here on the daily. So when the daily is driving up, you have a long-term, you have a long side directional decision. When it's matching over here, well, your trades are going to be to the long side. And over here, when the weekly is showing you this kind of upside move, as you see right over here, then your position size is going to be greater. Position size, position direction, in and out, exit, and entries for, let's say, swing traders, option traders for 1 to 3 days. And of course, if you want to go to the intraday scalping, intraday swing trades, then you're going to go to the Cockpit right over there and be able to get the important information that you need for your intraday trading. So this is how you bring it all together using our information and your styles. What am I bringing together here? I'm bringing together not only the cycle analysis, but the momentum conditions, and looking at them from weekly, daily, 2-hour, 15-minute, 8-minute, 3-minute, and putting it all together, how you use it as a trader. And that gives you just a great sense. Remember that we're running the special right now, just $99 for 3 months with a trial period of 14 days. So sign up. If you don't like it for the first 14 days, we'll give you your money back, and then you can get a good sense for how to use it or whether it really fits who you are as an intraday trader or not. And of course, all of those proprietary indicators that I showed you that are for level 4, well, you have to sign up for level 4 to get those. And we also are running a level 3 special now, which gives you a lot of our information and also our charts in a static form. So you can go to our website and see both of those specials that we're running. Or if you have any questions, write to Matt at askSlim.com.